Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning and welcome to Digging Deeper. It's a real pleasure to be back. I want to thank Red Cloud for bringing a wonderful guest on as well to talk about Lumina Gold. We're talking about the largest primary gold deposit in Ecuador, amongst other things. I mean, it's not just gold, but this is going to be a great conversation with Scott Hicks. Once again, it's been a while since we've had the show live, and we're really excited about it. So to have you back on and talking to us about what's been developing, what's been going on is great. We've got some good questions. How are things looking overall in this choppy kind of intense market?
Yeah, thanks, Andrew. Thanks for having us. Things are looking great at the project. We've kept on track and on time here. We're just finishing up our 35,000 meter drill program to take it to a pre-feasibility study. Obviously, the last month has been pretty tumultuous from a price action point of view for most gold developers in the space, and copper developers for that matter. But everything at the project's just on track and continuing as planned right now.
Yeah, and it's let's maybe take a big giant step back to kind of remind people of who you got involved. So you've got pretty big investors. Of course, this was a Ross Speedy project, and the whole work of projects that you have under the umbrella. The management, the project itself, gold, I mean, all of these. Let's take kind of a big step back and kind of just walk through who Lumina Gold is, who supports it, and kind of who's working with you guys to get you to this stage.
Yeah, sure. So this is a Lumina Group company. So this is Ross Beatty's development group. So the general strategy of the group has been de-risk these large scale projects and then look to sell them on to larger producers that can put them into production. So that's the general philosophy of the group. So it's the same technical team that's been working since basically 2003 together. Marshall Koval, who's heading up the engineering and all the study work. Leo Hathaway, who's heading up the geology and really has spearheaded this discovery. When we started with this project, Andrew, there was zero resource, and then we took it to 4 million ounces and then 8 million ounces, and currently we're sitting at 17 million ounces and probably looking to grow that in the next resource update with the PFS as well. So this group has a history of de-risking these large scale porphyry deposits and bringing them along the path.
Yeah, with 35,000 meters out, like coming back in, I mean, it's very hopeful. So if someone's looking at this and saying, all right, what's news that I should be paying attention to? That's a pretty big chunk of news to be waiting on to see how that comes back.
Yeah, exactly. I mean, we expect to kind of have another probably 30 holes coming out in the next while. A lot of those are infill, but there is some interesting step out work we're doing at the second pit at the deposit called Gran Bestia. So that's where we're hoping to add a pretty material amount of ounces to the project and really, improve it in that regard. So yeah, it's exciting times. And then, a lot of the other stuff, it sounds boring to people, but this is the thing. These are the things that matter, right? It's another round of metallurgy. It's getting those extra couple percent out that really drive the economics. It's, thinking about how to phase the CapEx. It's all these de-risking things that, will eventually get the project sold, hopefully.
Yeah, it's true, but that's what makes it a good conversation too, because we reach out to a lot of retail, and it's that treasure hunting phase that everyone is initially attracted to. Let's go find stuff. But that's just that's a big enough process and hurdle to find something. But it's then getting it down to, is it economic, amongst other things? Is it socially going to work? Is it going to work with the government? Is it going to work with an ESG plan? Before we jump into all of that, though, there's a great slide 3, where it gives you kind of a quick snapshot of who's involved. You've got the the management board owns 9%. Ross Beatty himself owns over 20%. and you're covered by Raymond James, Haywood, Red Cloud. These are great things to see, because a lot of companies, especially in the junior space, aren't covered by a lot of analysts. So they've got some high expectations with you as well. So there's lots of good work being done there. And I like to show those types of things because it's important for people to see that there are companies and analysts out there following you guys that have high expectations, and their full job is to look at advancing actual real projects and mining projects to get them done. And I think this is a good time to talk about some of the more specifics and details, and maybe not quite like strip ratios and whatnot, but like some of the operational costs, because for a lot of people, they wouldn't understand or know there's so many pitfalls or obstacles that one must overcome, even if you have a discovery.
No, absolutely. So, I mean, on the shareholders side, we're very fortunate, having Ross and actually a group of Ecuadorian investors as well that, is there for basically collectively 40% of every financing before we pick up the phone. So, I mean, that's a huge advantage. Route One, also out of San Francisco, has been a big supporter of the name, usually about 10% of every financing. So, that's generally where kind of 50% of our capital is coming from when we go for equity raises. And yeah, I mean, Haywood, Raymond James, both obviously very constructive price targets, and same with Red Cloud compared to where we trade now in the market. I know for your listeners' benefit, projects like this that have such a long mine life and so much in the way of resources have huge leverage to moves in metal prices. So even though we planned the mine at $1,100 gold and $220 copper, at these prices, you're getting just massive leverage on the NPV of these projects and what they're worth. So, I think Haywood's using a $1,800 or $1,900 gold price, and that's how you're getting those $2 targets. So, to the extent your listeners are big believers in gold and copper here going forward, there's not many assets that would offer as much leverage as this one does.
Yes, and we'll jump into some of like your comparables of companies and your friends and neighbors. But I think just, the people that would follow me and subscribe, we talk about like copper. I mean, I find it hard to believe anyone thinking there's going to be less copper used in the future. There's definitely a supply glut. I think 2025, say it does take you the 2 years of permitting and whatnot before you're in construction mode. There's lots of work that has to go to get you there. But the demand for copper is definitely going to be there, and as well as gold. Maybe you could talk to, with inflation, because that'll be another problem that people would be curious about with the CapEx. I mean, this is a 2020 study. You guys use very conservative numbers on the one side to not be aggressive on the projection of revenue and whatnot. But what does it look now? Because we've got this, I mean, how long, we don't know what inflation will last, but that must throw things off a little bit, and I'm some concern.
Yeah, no, it's a great point. So the first thing I'd say on projects like this is they're more sensitive to operating costs than they are to initial capital. So we've definitely seen a rise in initial capital across the sector. We're doing some things in the pre-feasibility study to mitigate that. So for instance, we were going to start at 40,000 tons a day and go to 80,000 tons a day. Now we're looking at 30, going to 60, going to 80. So phasing the capital more, really reducing that initial capital risk. And then on the operating cost side, what's nice is, in a lot of parts of the world, you're seeing power costs go up. In Ecuador, you've got lots of available hydropower, and power prices have been flat and stable. So that's a fixed piece, which is nice. And then in Ecuador, you've also got, subsidized diesel. They're a diesel producer. So diesel in country is also very cheap. So, that has gone up a bit, but it's not, what you're seeing in some parts of the world, right? So, as far as inflation goes, it's really, you're kind of seeing 20% on the CapEx side for people, and then a little bit on the op cost side. But as I said, we've seen much larger price improvements in the actual commodities and the revenue side of the project than what we've seen on the other side, right? So, we still think we're in a net benefit position compared to the last study we did in 2020 when, gold was 1,400 and copper was 275, right?
Yes. And once again, I think people's expectation of both commodities are going to do fair well in the next years moving forward as well. And what's interesting about your project too is is the infrastructure. I mean, I think you're 40 kilometers from port, which is very close. Especially if you think of some other areas in Ecuador. I mean, it's kind of like if you're in the Golden Triangle up in the mountains, very tough to get to. If you're in the jungle in the middle of Ecuador, that's a very different story than where you guys actually are.
Yeah, exactly. So, I mean, we're in an industrial area of Ecuador. There's, shrimp farming, banana farming, lots of aquaculture. So it is an industrial area. We're right by an airport. We're right by population centers that we can draw from to bring in a workforce. We're tucked back in the hills away from the population centers, but, physically very close. And if you think about other porphyry projects along the Andes, they're at higher elevations. This is not, usually you have to run power up there. We already have power to site. Usually there's potentially a water issue, say if you're in the Atacama or somewhere like that. We have lots of available water for the operations. So from an infrastructure perspective, it really is kind of the best case scenario for a large porphyry deposit. And, the other large mine that's producing in Ecuador, aside from Fruta del Norte, which is a gold deposit, is called Mirador. And it's a copper gold deposit. And they're actually shipping their copper concentrate out of this port that we're right next to. So they truck their con, 350 kilometers across the country to get to the port that we're right next to. And that is the main product that we will be exporting as well, is a copper concentrate with a lot of gold in it. So, just for reference for your viewers, it's about an 80% gold, 20% copper project by revenue mix.
Yes. Yet I wanted to kind of bring up this imagery too, because always in the back of my mind is ESG. And of course, we've looked at Ecuador before as well. And I get a lot of guttural reactions from some of our subscribers like, oh, no, not in the rainforest, not in the jungle, that type of thing. And they think why can't it just be in Arizona in the desert, that type of idea. So one of the things I wanted to check with you immediately was, okay, exactly where are you guys? Because it matters. I mean, especially we deal with a lot of generalists. People like, to get them excited. For them to see you're 40 kilometers from this port, that's a very different story than you're in the middle of the rainforest somewhere. That's not that play.
Yeah, exactly. No, this is not that play. And I mean, for context for your viewers, a lot of the land that our project's on was actually previously cleared for cattle grazing, because it is that type of area. So we've actually spent a ton of money and time reforesting the areas that the deposits aren't specifically on, because it's a 6,000 hectare land package, and the deposits only take up a small fraction of that space. So we've actually been rehabilitating habitat around the area that's off the deposits. And then more broadly, we're in a great province in Ecuador. We're in El Oro, which obviously means the gold, and we don't have communities on the deposit. It is an industrial area in general terms, and there's no indigenous communities in this province, which is very important, because obviously some of your listeners would probably see some different Ecuador headlines and different headlines really throughout South America, where there is pushback when there's trying to be development in these indigenous areas and areas with lots of communities. So it's good that we don't have that specifically around our project.
It's a huge thing, because even when we were speaking earlier, the thought of if you're 200, 300, 400 kilometers in, and your only way of getting material out is a constant flow of trucks in and out. It's one thing to say, let's have a mine. It's another thing that the community goes, well, now we're going to have a constant influx of like trucks in and out, bothering birds, wildlife. So, I mean, none of those doors open on any environmental angle at all, which I think is it's a massive hurdle to overcome.
Yeah, no, absolutely. And I mean, in fairness to people who do have those type of projects, there are workarounds.
Yes.
But usually the workaround is a lot of capital and a lot of money and a lot of planning, right? So, it's nice to just not have that be as big of an issue. And obviously these large scale projects, they're large, but so you need to think about ways to minimize all these things and not have the costs creep up on you.
And also, I just want to backtrack too before we've got a comment too, but this is hydropower too. That's
Yeah,
the other thing.
exactly. Yeah, exactly.
That's
So
another
Ecuador,
great. Yeah.
cheap hydropower, kind of under 7 cents a kilowatt hour for people. You might even be able to get that lower if you're putting in a long-term power purchase agreement. And it's very available. Like they're already starting to export some of it outside of Ecuador to Peru and connecting grids. So, from an ESG point of view, you're producing copper. You have low transit distances to port. You've got hydro green energy going in, right? So, I mean, those are all helping you, right?
Yes. And I mean, and sometimes these are kind of like the boring stuff when you're talking just treasure hunting and like the massive size, and people start figuring out the numbers of, oh, well, that's a big value. But it's critical. Like it's so critical, especially today with the political environment we're in, with the environmental, with ESG moving in. Projects will get stalled if they don't answer these questions. And it's great to be able to overcome them.
Yes. Yeah. And the government in Ecuador, for your viewers who may not be as familiar, they've really wanted to promote mining here and see it developed in a responsible way. Because I think the other important thing to remember in this country is there is mining. There's mining everywhere, but some of it's informal, some of it's illegal. It's not, maybe the most responsible mining from an environmental perspective. So there already is mining. The government's trying to shift that to these larger scale industrial things that have proper practices in place and are really accountable to their, to the environment and their surrounding communities, right? So we've seen two big mines come online at the end of 2019 in Ecuador, and both of those are producing a lot of revenue for the country, a lot of taxes for the communities, and they've really shown the benefit of mining in Ecuador. So there's another slate of projects that are coming up, and we're definitely one of those projects.
I mean, I'm fortunate I can speak to that to some degree because I have had interviews with people that have worked with UN trying to get the message across to artisanal or illegal mining, not only just in safety for themselves. I mean, there's places and they were explaining to me where people are just handling cyanide. Like, they're like no safety precautions because they don't know any better. And they would try to say to them, listen, for your own health, never mind, don't dump it in the water, but for your own health, you can't handle this just with no protection. So they've sent in UN teams to try to help and work with some of these artisanal mining operations. So to have an opportunity now to show on a big scale that you can mine and do it responsibly and in a very green way, I think it's a huge opportunity to bring mining to the forefront of people's minds. And right now is a great time to be able to do it. Yeah,
and if you went back to 2019, there was $300 million of metal product exported from Ecuador. If you look at the end of 2021, that was up to $2 billion.
Wow.
So it's gone 6x with the two mines that have come online. And that is the way the country is moving, because their other exports really are petroleum and agriculture and tourism for the most part, right? So, they know that the petroleum angle is not always going to be there. And they see this as a way to really diversify the economy.
And I doubt, I mean, I'm going to not go much on a limb. This isn't a tourist area. Like the port necessarily wouldn't be a huge place people be traveling to.
Yeah, no, exactly. So a bit further north, you've got Guayaquil. Yeah. It's typically where the tourists fly in on their way up to the Galapagos, which is, a healthy ways offshore there. And that is the traditional tourist areas, as well as the Amazon areas and the highlands away from our projects.
Now, we've got a great question as well, so I'll just ask it right now. So Ross had mentioned, this is from, there's no name here, but in a fireside chat with Red Cloud, and they're saying, if I remember correctly, that Lumina was almost sold to a Chinese firm, but it eventually fell through. Can Scott share the takeout price? Well, I don't know if they're going to. Okay, listen, if you want to answer that, go for it. But can you speak to that at all?
Let's just say substantially higher than where we were trading is what we were looking at there, obviously. Yeah. And I think these things with the benefit of hindsight. I mean, we obviously, after the PEA came out, we thought we might have a good chance at moving this along and selling it. That was during the pandemic. It was challenging for people to visit sites, but even if they were willing to do that, just not a lot of willingness from companies to be setting up in new jurisdictions during the pandemic. So, I think now we're at a point where most people are probably going to wait to see the next set of data. Obviously, with the drilling finishing right now, we're going to internally have a new resource model at the end of October. That's going to go into a new mine plan for the PFS. And then you're going to see a new PFS, early, call it, we're shooting for probably April, next year. And that'll refresh all the economics, all the CapEx, the resource and everything. And I think that'll answer a lot of questions that people have been asking us during this interim period. And like I said, I think there's going to be a lot of positives along with that. Obviously, there is a bit of inflation in the CapEx, but we're going to see an improved resource. We're going to see potentially some additional ounces at Grand Bestia, the second deposit there. We're going to see some potentially improved recoveries on the metallurgical side. So a lot of optimization that's going to go into this study.
Yeah, and that the optimization alone could add a lot of ounces. But what, and maybe I already asked this, so I think it's important. Out of that 3,500 meters or 35,000 meters, how much of that is infill compared to more kind of exploratory a bit?
Yeah, so the initial program was 30,000, and that was about 2/3 infill on the PEA pits and about 1/3 step out. And then we announced the extra 5,000 meters because we liked what we were seeing up on the Grand Bestia ridgeline, and we thought we could push that pit, probably in the neighborhood of about 200 meters further to the northwest.
Okay.
And I know you said not to get into strip ratios, but that has an excellent strip ratio already. But we thought adding that ridge line and being able to take the whole thing might reduce the strip ratio even more. So, they're all, like I said, incremental improvements, right?
No, and the only reason why I mentioned is that we've got so many generalists, and I don't want to bombard them with too much technical terms where they're like, I don't know what you're talking about. But maybe you could tell people, since we brought it up, what would be a strip ratio? Why is that important for at this stage and for mining in general?
Yeah, so there's a bunch of factors that go into obviously whether a mine's economic or not. But grade is first. It's always what's in the ground, and then it's how much material do I need to move to get at that grade. So at Cangrejos, it is a lower grade large scale project, but it has a very, very good strip ratio. So it's 1-to-1 roughly. You do not have to move much material to get at that grade. Whereas some of the other projects that maybe your viewers are familiar with in, say, a gold project in Ontario or whatnot, maybe those have 3-to-1 strip ratios. And this all kind of ties back to the op cost comment we were making. If you got to truck an extra 3 tons of ore versus 1 ton of ore, and you've got diesel costs and you have all these input costs, that does materially affect your operating costs, right? So it is a huge advantage for this project that it is basically a 1-to-1 strip ratio. And really, the slide you're showing right now is kind of adjusting the grade by dividing it by the strip ratio. So we go from kind of the worst in the peer set, just to show your viewers I'm not cherry picking data here, to second best in the set when you do that adjustment. So is it the full picture for the mine? No, but this is a huge portion of the operating costs and what drives the economics. Obviously, there's processing on the back end and initial CapEx that are kind of forming the rest of it. But this is a huge component that your viewers should be aware of.
This is great because it helps get them like a step further from, we go from the treasure hunting phase of, we found something. And even that can be challenging because someone says, okay, we found X per gram per ton. That is good, bad, and different. You have to hit that, but it's important for them to know that a next step around from that discovery stage are other steps, including metallurgy and strip, to go, can this become a mine? And this is showing a very, very good indication of this looks very strong. I mean, and that's it's good that people understand each step along the way as they go along that investment curve. And we've talked about it a few times, the famous Lassonde investment curve, that we're in kind of that intermediate stage with still, there's still blue sky horizon, there's still upside, and a lot of chance of moving some inferred over into the indicated phase. So there's lots to look forward to in the next 6 months.
Yeah, and we know we're in the tough part of the curve right now. You absolutely nailed that. I mean, for your viewers' benefit, our market cap is lower now than it was so I'm not talking, share price, because that's one thing, but our market cap is lower than it was in 2017 when gold was 50% lower, copper was, call it 50% lower too, right? And at the time, we had 4 million ounces of the project. Now we have 17 million ounces of the project. So we've moved from that very excited phase when people saw us consolidate the concessions, put out that initial 4 million ounce resource, and now we actually have a lower market cap. So, for people who have patience, and when I say patience, I mean kind of, a 1 to 3 year time horizon for their investments, and are bullish on gold and bullish on copper. I mean, this in our view is bottom trough valuations, right? You're talking about 140 Canadian million dollar market cap with 17 million ounces of gold in the ground and 2 billion pounds of copper. That's been fairly heavily drilled. I mean, we're going to be out, call it 100,000 meters of drilling at the project as of this month when we just finished up now, actually. So, I mean, it's a pretty de-risked project from that perspective.
Yes, and this is usually a conversation you'd have just with institutions and with funds, like very knowledgeable, high kind of level conversations, and that's why it's so cool to be able to have retail investors look at this and go, oh, okay, hold on. So, if I get my head out of, we found the treasure, we found stuff, and there's still more to be found. How do I make money? Which is really at the end of the day. And if they're patient, this has hit all the hurdles that one would need to hit. There's always more. There's always more. There's permitting, like this things could go rocky, but you've got a lot of data and a lot of data coming in the next 6 months as well that can materially change things quickly.
Yeah, I mean, I think for investors now, the nice thing is, there's no crazy fatal flaw, with the project, whether it's metallurgy or, it's whether it's some infill drilling and the resource doesn't prove out, or, we all know there's lots of pitfalls in mining. But this is very well along the track for being de-risked and becoming a mine. So, you don't have that risk profile. And, for people who want the big leverage to moves in metal prices, for people who, I've followed our group for years and seen, the companies get sold and obviously all at different stages, I mean, it's, we get asked this question every day in my inbox, but it's never an easy thing to predict when a company could get sold. But we've sold them at resource stage, we've sold them at pre-resource, we've sold them at feasibility, we've sold them all the way along the development track really over the years. So, all you can do is just keep doing the work regardless of what the market conditions are and move these projects along, right?
That's a great point too, because a lot of people, if they're newer to the markets or they're not familiar, they'll look at, say, just stock price and go, oh, well, if you sold now at such a terrible price, but you're not going to accept the price that this, because sometimes the stock market might reflect a true value of something. Other times it has no bearing whatsoever. And with the like you've mentioned, the amount of work, the de-risking, I would be confident to say that this price is very off. It's very strange, to say the least. And I mean, I'm not an analyst, so I can't put a price or anything on there, but it's hard to have a mine. I mean, to actually find a discovery and make a mine. And you guys have hit a lot of these challenges and hurdles, and the value from your team, I'm sure they have a number in their head. And it's not like these are new kids on the block that found something and they don't know how to move it forward.
Yeah, I mean, if you went back to when Ross and Marshall and Leo put this thing together in 2014, right? It was a view on a couple of things. It was a view on, well, gold's at 1,100. That doesn't seem right to us. So we think gold's going to trade up. Ecuador doesn't have mining now, and that doesn't seem to make sense. And we think the government's probably going to change their view on that and improve. So, I mean, I think both of those macro concepts have really played out over the last 8 years. And obviously we've got gold, materially higher. We've got big operating mines in Ecuador now, and most of the copper majors in country. So those things have played out well. The one thing I will say that our group probably got wrong is we wouldn't have guessed that an asset like this would be trading at, 0.1 times PNAV, right? And, for your viewers, usually these type of development stories get sold kind of between a 0.4 and 0.6 times PNAV. So, and you had the chart up there where a lot of our peers are trading around a 0.3 right now. I mean, we're trading at 0.1. So it is an exceptional value opportunity from that perspective. And you've got all of this work underpinning the value of the company. And it is hard to imagine it get much lower in the trough, right? When you talk about that Lassonde curve.
So, I mean, we've been chatting for quite a while, and I could keep going because it is interesting. The project itself is fascinating and the opportunity is big. And maybe if you could leave viewers with a couple key points, we've covered a lot, but just to sum it all up and let them know where the opportunity here is, both short-term, but also, it's mining. We're talking years, but there's asymmetric possibilities here.
Yeah. So in the short term, if you're thinking kind of next 6-7 months news results, you're going to have probably another 30 holes of results coming out here, with some of that being the step out at Grand Bestia. So kind of we'll give people a view on how many ounces we're going to be able to add to the project. There's going to be some updated metallurgical work, and that'll give people a view on, how much extra gold and copper can we get out during the recovery process of this. And then the PFS, and really that'll set the stage for what type of project this is going to be and how it benchmarks globally. And for your viewers, the last thing I'd kind of say is, you've heard us talk a lot about how large it is and Ecuador and the mix, but for context, this is, one of the largest gold resources in the world. It's a top 40 resource by size of any project, whether it's producing or developing. So, there's just not a lot of projects of this type of scale out there. And, if you own these long mine life assets, at some point that is always proven out, for people. So I guess I'd say to be able to buy that at these valuations is extremely compelling for patient investors.
Well, thanks, Scott. We got to cover a lot more than I even hoped. I really appreciate you taking the time to walk us through this. Once again, thanks to Red Cloud. And listen, if you guys want to have the Red Cloud analyst report, reach out to Red Cloud themselves, or even to me. I can direct you to someone over there and get Red Cloud's opinion on it as well. But pretty exciting times, and I always like it when there's lots of news in the midterm. But patience is key with these things, and especially if you're looking for those huge gains. And there's a lot of people. I mean, if their portfolio was tied into any kind of ETF with the U.S., they pulled back because of all the FANG stocks. Maybe this is something to take to your portfolio manager and ask them, about a sector change and to how to rejig their portfolio. It's a good conversation piece, and this would be a great piece to consider as well. So thank you, Scott. I really appreciate you coming on here and walking us through this.
Thanks, Andrew. Have a great rest of the summer. And if your viewers have any questions, you can always email me, and you can find us on Twitter, and you can find us on LinkedIn. So definitely give us a follow, and we'll keep you up to date.
Excellent. All right. Take care.
Okay. Thanks, Andrew. Bye.
Today's company presentations are brought to you by Red Cloud Financial Services and the team at Red Cloud Vancouver. Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs. Tune in every Thursday at 4:15 p.m. Eastern, 1:15 p.m. Pacific for weekly corporate presentations.